Collapse file number 19. Subject: Melvin Capital Management Hedge Fund, New York City. Assets at the start of the year, $12.5 billion. Adversary: a message board. Time to kill, 19 trading days. Cause of death: for once, everyone could see the professional's hand, and the internet decided to play it. This is the Collapse Files. January 2021. This file begins with a shop, GameStop, a chain that sold video game discs in shopping malls in an age of downloads, in a year when the malls themselves were closed. Wall Street had examined the patient and reached a professional conclusion: terminal. Revenue falling for years, hundreds of stores closing. To the sharpest funds in New York, GameStop wasn't a company, it was a corpse that hadn't stopped moving, and there is a way to make money from exactly that. Enter Melvin Capital. Founded by Gabriel Plotkin, a star trader from Steve Cohen's SAC Capital, a man with one of the best records of his generation. He named the fund after his grandfather, a small businessman. By 2021, it managed billions, and it had built one of the largest bets on Wall Street that GameStop would die. Understand, this was not a reckless bet. It was, by every professional measure, a correct one. The analysis was sound. The models agreed. Melvin had simply made it the way professionals do, enormously, with borrowed shares, and filed the required disclosures where anyone could read them. Anyone did. The bet is called a short. You borrow a share, sell it, and promise to return it later. If the price falls, you buy it back cheap, hand it back, and pocket the difference. If the price rises, you still have to buy it back, at whatever the market demands. And here the file records a number worth reading twice. By January, more shares of GameStop had been sold short than actually existed, well over 100% of the available stock. Someone someday would have to buy all of it back, because someone else had examined the corpse. On a forum called Wall Street Bits, a corner of the internet where traders posted their wins and their catastrophes with equal pride, the file's key witness had been making a case, loudly, publicly, for over a year. A financial analyst from Massachusetts named Keith Gill. Online, he went by a name this narrator is not permitted to read aloud. In September 2019, he posted a screenshot, $53,000 of his own money in GameStop. The forum laughed at him. And this is the first twist in the file. The squeeze that follows was not a random mob stumbling onto a weakness. Gill had published the entire thesis in posts, in hours-long videos for anyone to read. The stock was cheap, new consoles were coming, and the short position was so large it was a loaded spring. The professionals had placed their bet in the fine print. The amateurs published theirs as a broadcast, and Wall Street, which reads everything, read it and shrugged. What Porsche had done to the hedge funds in secret, in File 9, a message board now prepared to do in the open. Buy the stock, buy the options, and wait for the mathematics of a promise that cannot be kept. January 11th, GameStop adds Ryan Cohen to its board, the investor who built the pet food giant Chewy, a man with an actual turnaround plan. The stock stirs, the corpse sits up, and the forum begins to buy. They bought call options, bets that pay off if a stock rises. Every option a small investor buys forces a market maker somewhere to buy real shares as a hedge. Thousands of small bets became an engine, pushing the price up mechanically, click by click. The file preserves the evidence in its original form. Exhibit: posts consisting of nothing but rocket emojis, dozens at a time. The meaning, translated for the record: the price of GameStop was expected to rise. It did. Under $19 at New Year, 31 by the middle of January, then 65. Then, on January 25th alone, a peak near 159. Every rise forced shorts to buy shares to escape, and every escape drove the price higher, a fire feeding on the people trying to flee it. Inside Melvin Capital, the best trader of his generation was reportedly losing more than $1 billion a day. The fund was down 30% by late January. By the end of the month, 53, the corpse was killing the Undertaker. January 25th, the emergency transfusion. Citadel and .72, The fund, run by Plotkin's old mentor, Steve Cohen, injected $2.75 billion into Melvin, officially an investment on attractive terms. But Wall Street noticed what it was: a tourniquet. Nobody hands billions to a fund that is winning. January 26th, the richest man alive joined in. Elon Musk tweeted a single word, GameStonk, with a link to the forum. The next morning, GameStop closed at $347. January 28th, GameStop touches $483, up roughly 25-fold in a month. On the forum, users post screenshots of life-changing balances: tuition paid, mortgages cleared, medical debt erased, gifts from the corpse Wall Street had buried early. And then, at the top of the vertical line, the buy button vanished. That morning, Robinhood, the free trading app where the crowd did its buying, restricted the purchase of GameStop. You could sell, you could not buy. What happens to a price when its biggest source of buyers is switched off, and its holders can only sell? The casino had changed the rules mid-game. The silver market pulled the same lever in File 15, 41 years earlier, to exactly the same effect. GameStop fell 44% that day. The forum howled conspiracy. Wall Street had pulled the plug to save itself. Congress demanded hearings. Lawsuits were filed by the dozen. The truth, when it surfaced, was stranger because it was boring. Exhibit A in this file, the reports. A Securities and Exchange Commission staff report, October 2021. A congressional investigation titled, Genuinely Games Stopped. Together they reconstruct that morning, hour by hour. At 3:52 a.m. on January 28th, the clearinghouse that settles America's stock trades sent Robinhood its morning bill, $3.7 billion in collateral due before market open. Robinhood did not have it. By 9:11 a.m., after frantic phone calls, the clearinghouse waived the largest charge, an excess capital premium of over $2 billion, and the bill fell to $1.4 billion. Robinhood turned off the buy button not as a conspiracy, but because it was hours from failing its own plumbing. The boring explanation had one problem: nobody believed it. When the app that called itself the People's Broker blocked the People's Trade at the exact top of the People's Squeeze, no footnote about clearing collateral was ever going to be heard. February 18th, Congress summons the players by video link. The billionaires testify in lawyerly paragraphs. Keith Gill, the analyst who started it with $53,000, delivers the file's most famous line. Under oath, asked to explain the entire affair, he says, "I like the stock." The SEC's verdict, buried on page 26 of its report, was the quiet twist nobody wanted. The great squeeze was mostly not shorts covering at all. In the staff's words, it was the positive sentiment, the crowd's own relentless buying, that drove the price. The shorts were the spark. The crowd was the fire, the fuel, and in the end, the thing that got burned. Because the file must record who paid, many of the last buyers, at $300, at $400, were small investors who arrived late to their own revolution. When the stock fell back to 40 by February's end, the losses landed on the same kind of people the movement claimed to be avenging. And Melvin Capital, the fund never recovered. It ended 2021 down 39%, kept bleeding into the new year, and in May 2022, Gabriel Plotkin wound the fund down and left the industry. A $12.5 billion firm, run by one of the most decorated traders alive, killed by a forum it could read the whole time. The affair outlived the trade. Meme stock entered the dictionary. Cinema chains, car rental corpses, bankrupt names of every kind learn the trick. When the crowd is the catalyst, the fundamentals can wait. Regulators wrote reports. The reports changed very little. The tally: Melvin Capital, dead May 2022. Losses across the shorting funds in January alone, billions, estimates ran past 10. Robinhood, hauled before Congress, fined for earlier failures, forever the app that turned off the buy button. GameStop, still trading, still somehow alive. Keith Gill logged his final screenshot that April, his $53,000 had become tens of millions and went silent. The professionals had the models, the data, the doctorates. The crowd had the one thing the models never price: the willingness to lose everything together for the joke of it. The pros called the stock worthless. The forum answered in rockets. File 19 closed.